live stream at the beginning of every live stream. I think that's the part that they would look forward to the most. In fact, Periscope waiting for YouTube to come up is probably a whole thing. All right, looks like YouTube is fired up here. Sweet. All right. Hey, guys, welcome back to another episode of the Crypto Campfire podcast. This is the professor.
And Mitch.
And today we're going to be talking with Stephen McClurg, the CIO of Valkyrie Investments. But before we start talking to Stephen, let's grab that crypto news from the,
oh, wait, we're live. We don't do that.
At this point, I'm just going to continue doing it so people wonder if I'm actually forgetting or if I'm doing it on purpose.
There you go. Well, we can throw a little quick news out there. Bitcoin dropped below 50K today. The market's seeing a little bit of instability and a little bit of a pullback. But, this was to be expected. And I believe the first week in March is going to be a rough ride for everybody that's just expecting things to continue to go up. So that's my opinion.
You mean we don't climb forever?
No. Yeah.
Shit. I thought going to the moon was perpetual.
We're not quite there yet. We're getting close.
We're getting there. All right. So, Stephen, let's just dig into you a little bit first. Let's go all the way back. And I want to figure out how you got into crypto in the first place and what got you hooked on it. What side of crypto was most exciting to you at the beginning?
Yeah, so I actually came from two different angles. The first one was I spent most of my career in traditional finance, but I took a break back in 2007 and went to the video game industry for 2 years, doing strategic planning and all that kind of stuff. And between 2007 and 2009, I was working at Electronic Arts, and the iPhone was coming out, and this was big new technology, and we were building games for it. And we were trying to figure out the ways that consumers were going to interact with a game on an iPhone, as opposed to the games that we had previously published, on a flip phone, where it's like, you charge somebody 99 cents a month. They get access to things like Snake and bowling and Tetris and Bejeweled, on a little flip phone. And the games were a little bit more in depth that we were making on the iPhone. And we came up with this whole idea of utilizing a digital economy, and the whole freemium model and purchasing in-app features with a currency that you buy. Also around that time, I was noticing this other game called World of Warcraft, where people were playing World of Warcraft for days straight, mining gold and then selling that gold as a digital currency that you can actually make money off of. And fast forward a few years later, 2010, when I first read the Satoshi white paper and heard about Bitcoin, I was like, oh, this makes a total, this makes a ton of sense. I've seen this happen in video games, and now it's a currency that goes outside of the game. Why wouldn't it? And from there on out, I just sort of believed in the concept. Going a little bit further, I saw it at first as a monetary system for developers, right? Because back in 2010, 2011, people like me couldn't really access Bitcoin, right? I mean, you could, but you couldn't, right? I'm not smart enough to be a developer and to build a wallet and secure that wallet and to make transactions on it. It was all very complicated back then. But if that's what you did all day long, and I think that so I saw it as a way for developers to share work, to work on projects together, and to transmit money around the world very simply and easily, as sort of like a digital economy type money, but not in a physical world. Later on, I changed my mind about that, but that's how I saw it back then.
So coming from a background like EA and the gaming world, what do you think about blockchain gaming and obviously the major changes that blockchain provides to revolutionize gaming?
I'm not really.
I mean, I know that's a big category, but
yeah, I'm not really seeing it yet. I feel like it's a stretch. There's a lot of people in the traditional game space that are looking at utilizing blockchain, but really all they're doing is utilizing blockchain as a way to raise more money because it's sexy. It's not really, in my opinion, it's really not that useful. And a lot of the use cases that have come out actually don't make a lot of sense. A lot of people are saying, well, you can use blockchain to, have a weapon in one game and transfer it over other. But it's like, when you come from the business of video games, you actually know that you would never allow somebody to trade a weapon or other kind of item in one game for another, because that takes away from your revenue model, right? Like I'm not gonna build a game over here that I make money selling things and allow somebody just to import things from another game. And by the way, it opens up a whole other can of worms, right, for the publisher, because it's like, okay, well, how do you utilize that other item in this game that's built for a specific person? And then the art is also, you know, each game has its own set of artists. Even for like a big publisher like EA, there's different art groups that work on each game, and it doesn't really translate when you're trading items, you know, back and forth through games. So I don't see that use case.
I will say that you've got some points there. Number one, obviously, there's a lot of people doing things with blockchain that don't need to be using blockchain, and they could use a SQL database and be just fine. Mm-hmm. When you start talking about tradings and that not being useful and cutting into your revenue model, I kind of disagree with you on that front, because I think there's a bigger opportunity there to force it to be within your revenue model.
Yeah, and you hit your mute button.
The mute button, the dreaded mute button.
The mute button.
Okay, so let's go back. Yeah, you got some good points there for sure. The biggest one, obviously, the first thing you talked about was people using blockchain for all kinds of things just because it's sexy and not because it's important. And clearly that's a huge problem. That's why we see so many ICOs fail, you know, 2017, 2018, especially. And that's a big problem that we have to look at. There's a lot of people using blockchain when they could be using a SQL database just fine. But when you start talking about the trading of items and things like that, and it cutting into your revenue model, I think you're missing the bigger picture of utilizing blockchain to help bolster your revenue model. So look at it from the standpoint of, let's say you created items or weapons. We were talking about weapons earlier, swords, that kind of thing. And in the smart contract, it's coded so that you as a developer get a cut of every sale that ever happens on the blockchain. You automatically get a percentage of every trade that happens. So then it becomes extremely beneficial to you for people to trade outside of the game. On top of that, you can also take artwork, things like that. If there's artwork goes into that, you can also attribute a percentage of that to the artist. This can all happen in real time. There can be real-time payments based on time use in the game, things like that. Anything that generates revenue, you can take micro payments out of that. So while at face value, if you're just replicating the original model with blockchain, you're doing it wrong. But you can take that model and you can evolve it along with the evolution of your base technology, and then you come up with something beautiful. So I think there's just a lot to be discovered. There's a lot of issues that obviously go along with it that we haven't solved yet, but I think in time we're looking at something pretty good there.
And I also think that stepping away from the mentality of our own pockets and getting into the ideals of creating equality on more of a realistic scale than what it's at right now, you know, like whether it be financially or you know, your status in the world. I think that this whole crypto movement and having so much open source, yes, there's revenue streams that need to be had. People need to have money to operate. People need to make profit. But I think when we start looking at the overall scale, like the professor said, with being able to incorporate and give back to the artists, give back to the developers that created this, give back to the people that are actually using it, I think that's where the true beauty of blockchain technology, and not even that, I shouldn't even use that word. That's where the beauty of community from blockchain technology exists, right? Because there's so much about community.
Yeah, there you go. Well, I'll tell you where I have more interest. And you know, I only spent a couple of years in video games. I spent most of my career in financial services. And where I see it is really in disrupting the intermediary side of financial services. A lot of times, in order for you to build something, whether, you know, if it's a video game company or a financial services company, there really has to be something in it for you. You know, if you're a for-profit company, to want to build that. And a lot of financial services companies are transacting, you know, they're launching ETFs, they're launching mutual funds, they're transacting in bonds. And those things actually work quite well on the blockchain, and it's in their best interest to actually create securities that trade on the blockchain, that get away from the intermediaries, because the intermediaries dip into the pockets of the financial services companies that are managing those products. So that's where it actually makes a lot of sense, where there's cost savings and actual increase in revenue, to say tokenize a bond, tokenize a mutual fund, tokenize an ETF, and trade those things peer to peer. Of course, the pinnacle of everything that we're talking about, these are all the uses of blockchain, but really the pinnacle of it is a peer to peer global electronic money system, which is Bitcoin.
I totally agree. And I think that there's a lot of evolution that's happening within the bond market right now from the news that I've been seeing, and even the ETF markets. And I've never agreed with them. I've never agreed with how there's so much being leveraged. And I think all the leveraging that's happening in the financial systems are going to cause their demise. But what are your thoughts on cryptocurrency and the future of actually being a global currency, being adopted as a global currency outside of what it is already now?
Yeah, so I already see a handful of cryptocurrencies already being adopted. Maybe not globally. Bitcoin's really the only one that's global. But a few others are regional. But in the case of Bitcoin, the way that I think about it is, when you have a certain country, U.S. is a good example, of course. The U.S. is a country that has a border, that has its own currency, dollars. Maybe some other countries use it as well. Actually, all countries also use it, but then you go to other countries and they have their own currency. So each economy is set up with its own currency that's run by a central bank. Bitcoin is really the currency for the digital economy, which doesn't have physical barriers and borders. There are some barriers and borders, but they're not physical. So like I said before, it kind of started off as a money for developers, and now it's become a money for anybody that is involved in a digital economy. And that's why it makes so much sense for people like Michael Saylor and Elon Musk to put Bitcoin on the balance sheet of their companies, because these are technology companies. It's easier for me when I buy a Tesla to pay in Bitcoin than it is to pay in dollars or some other currency, right? By the way, they've already broken the model of buying cars, right? I bought a Tesla for the first time 8-9 years ago, and I decided I never want to buy a car another way again, right? You don't have to go to a dealership and have somebody take you around and show you what they think you want, and then sit around and then negotiate and waste your entire day, and then feel like you got ripped off at the end of the day.
Right.
So with a Tesla, you go online, you open up your computer, you choose the items that you want. There's a set price. You don't negotiate. And then once you figure out what you want, you hit enter and you pay, and then you get your car at some point in time in the future
Delivered.
It's brilliant. It's really the only way to buy a car.
Oh my God.
Completely
they
broken.
Actually have car vending machines. Have you seen those?
No.
Okay, so in my city where I live, there's actually a car vending machine, and these cars, there's like probably 15 or 20 cars in this building, and it's all glass, and you can see every car that's in the building, and it's on a conveyor system. And you go in and you look at the car's inventory that's there, and if there's one that you want, you do basically all the paperwork right there on the digital machine, on the computer, and you do this. You set up the payment process, and the car gets brought down, and they got a porter that actually grabs the car and pulls it out for you, and off you go.
That's fantastic.
Pretty insane.
Pretty
take Bitcoin.
Yeah.
Only a matter of time.
Freaking car ATM. Let's go.
Cars and cryptocurrency are going to be so closely tied together in the future when you start looking at things like real-time payments, and once you start having automated deliveries and stuff with the Tesla. Your Tesla goes out and picks up your groceries and picks up like 3 or 4 other people's while it's out and delivers them and charges it up on the way home. And, maybe gives a couple rides for Uber before it comes home and parks for the night. So, it's you start incorporating cryptocurrencies and start looking at microtransactions and stuff, and it gets to become a really interesting ecosystem.
Yeah. I mean, Bitcoin does have its limitations too, though, right? So I think
Bitcoin does, but
I think Bitcoin works well for large transactions where you don't have to have it completed in a second, right? Because it takes 10 minutes, and any cross-border transaction. That's its best use case. It doesn't work for fast food. It doesn't work for a drive-in Starbucks, right?
No, and you're absolutely not going to use Bitcoin for micropayments unless you're wanting to use something like payment channels in the Lightning Network, which have its own set of flaws, which in most cases aren't ready for production. So, but that's of course where all the other options come in. We may not have anything that's in place yet that is actually feasible for some of these systems that we're talking about, but if things evolve, we're not still on Netscape for a reason, obviously. So,
right, kind of like Litecoin being a faster means of transaction. And, in a matter of less than a minute, I believe it is. And, the cost of transferring it is really negligible in most cases, depending on the level of expenditure. But, there's probably 3 or 4 of them out there that are actually good at cross-border and good at, fast transactions, secure transactions. So, it's kind of a beautiful world when you open your mind outside, and there's so many maximalists out there. If they could actually open their mind outside of their Bitcoin bubble, and see what's really out there and the value of what's really out there, instead of trying to compete with one another, work together within the ecosystem.
Yeah. Well, and just like, those limitations, some of these other coins, like you mentioned, Litecoin, I think Dash and Zcash are also good examples of currencies that might be utilized in third world countries for daily transactions. They're a little bit better suited for that, right? You get instant verification. You can bank the unbanked. I think they're much better applications there. Developed countries, large transactions. I think Bitcoin works. And by the way, if you want to go through an intermediary, if you want to use like a Coinbase wallet or a Gemini wallet or a backed wallet or something like that, you can roll up into a Starbucks and use your Coinbase wallet and buy, a coffee, and the transaction
through a third-party service. Yep.
And exactly. then on the back end, they have a centralized ledger that they're processing, and you're paying for that privilege, but it's still possible. It's just not in the pure form that we're looking at.
Exactly. Right. All right, so let's get into ETFs a little bit into Valkyrie. For those who don't have an idea what an ETF is, can you just kind of give a high level overview of what an ETF is, how it works, and what's different between buying Bitcoin from an ETF versus a traditional exchange?
Yeah, exactly. So, well, look, really what an ETF is it's a financial instrument that's utilized to give you exposure to things that aren't easy to get exposure to on its own, right? One example is the S&P 500. You don't want to go out and buy 100 different stocks to get the exposure that you get for just buying an ETF that has the exposure to all those stocks. Another example is gold. There are gold ETFs. Gold is hard to transact electronically, right? You can't digitally send a gold bar to somebody else, but you can buy it through an ETF and speculate on it through an ETF. So there's, that's really what an ETF is designed for. In the case of Bitcoin, Bitcoin is something that you can transact in on your own. However, for a lot of institutions and insurance companies and pension funds, or even companies themselves, to get exposure, they can't just go buy physical Bitcoin. It breaks from an audit perspective, right? So if a company decides, hey, I'm going to buy Bitcoin on my own balance sheet, and I go open up a wallet, well, your auditor is going to come along and say, okay, well, where's these assets that you claim to have, and how do I account for them? And it gets really confusing really fast. But if you own it through a financial instrument like a fund, like a grantor trust, or which is something else that Valkyrie has, we have companies that buy Bitcoin on their balance sheet through that grantor trust, so that they can then show, that the fund documents to their auditors, say, hey, look, here's what we've got. The ETF is even more efficient that way. If I'm a company and I want to own a certain amount of Bitcoin and I don't want to run into audit problems, I'll just say, okay, I'm going to take 10% of my cash and go buy a Bitcoin ETF, and well, there's the ETF, and the ETF owns Bitcoin. So it's just it's an easier way, more efficient way, and a more compliant way for institutions to own Bitcoin.
Is there ever a concern for having too much paper versus too much real product?
In what way?
Like, let's use gold, for example. When gold started being traded digitally, paper gold, if you will, versus physical gold, the stores of gold are less than the actual paper gold that's out there. And so there's a lot of leverage and a lot of manipulation of price because of that. Do you see that as a potential with ETFs, a potential of happenstance?
Yeah, it could. Now, for you to own physical, so the ETF that we filed for actually holds physical Bitcoin. So it's not a derivative of Bitcoin. It's not Bitcoin futures.
Right. Futures and derivatives, I guess, are more what I was leaning towards.
Yeah.
But
Exactly.
Go ahead. I'm sorry.
Yeah, because a lot of the gold ETFs, for instance, aren't physical gold based. They're futures based. So it's a lot of paper money. There is one fund out there that's pretty large. That's a Bitcoin futures closed-end fund, which is not too dissimilar from an ETF. And that does create the problem in that particular fund, or if there's another futures ETF, futures-based ETF that comes out. But for physical-based, you have to own one-to-one, and that's really the beauty of it.
Why do you see futures as a reality? Why were futures even created? Was it just simply something out of greed? I mean, I can't
really
wrap my head around it.
Yeah, exactly. No, I mean, it's used for greed, of course, but really the reason why futures are created is to is really at the very base of it for merchants to hedge themselves, right? And I'll give a good example that's a little bit more modern, but it's been going on forever, right? Farmers, if a farmer has a crop that's coming in and they want to lock in a price today for their future crop, then they're going to, buy or sell futures of corn or wheat or something else.
That's a beautiful example.
Yeah, it's really how it was created. Kind of going a little bit more modern day and things that most people would understand is Southwest Airlines. Okay, so Southwest Airlines very brilliantly started their own oil futures group so that they could lock in the price for gasoline by hedging oil futures, so that they're not forced to spike prices or lower prices at the last minute in order to keep up. They balance the price of oil with their ticketing with futures. So those are the good applications. Of course, people speculate, right? But that's really what they're for. Bitcoin futures, I don't know. I mean, I guess it's a volatile enough asset where if you're transacting in it as a business and you're holding Bitcoin and you're like accepting Bitcoin as payment, and I mean, that's where we want to get to, right? That's where futures actually might make sense. Is if you're a company and that's where you're transacting and you want to hedge that price out, you might want to buy and sell futures against your Bitcoin payables or your Bitcoin receivables.
All right, so JMac asked a good question in the YouTube chat. He's wondering if there's any tax advantage to owning through an ETF.
I probably shouldn't answer that question because I'm not a CPA, but it does make it easier for you at the end of the year. Because I mean, I'll tell you this: when I've done my taxes and trying to figure out my cryptocurrency trades, there's no good way to do it.
No,
I know everybody else is.
It's a nightmare.
It's a nightmare.
Shot of Xanax, a shot of speed, some Monster, and an all-nighter, and you might get half of it done.
Oh man, and it doesn't matter. It doesn't matter what exchange you're using. You know, it doesn't work. Nobody's cracked the code there. But if I'm trading on Schwab, I get this printed statement that's really nice, and it plugs right into your accountant's software that tells you exactly how much you owe, what your gains and losses, and you're done. Crypto doesn't have that yet. So, you know, hopefully they do, but
they will eventually.
Yeah,
if you're getting close. There's some services that will kind of
they will eventually, and it's kind of like
stuff, but yeah,
it's kind of like taking that rough road versus the gold road, right? You get to a fork in the road, and there's this gold pristine traveling, you know, you can walk in all kinds of glory, and you can go this way, and you might struggle a little bit, but the end result is much more rewarding. And, you know, rather than giving somebody the control of all of your stuff, like you say with Schwab, and yes, that's a convenience, but for that convenience, there are some sacrifices on your end that you have to make for that convenience. Just as being your own bank, there are some sacrifices that you have to make and some responsibilities that you have to accept to be able to do that. And I think the ability of cryptocurrencies, blockchain technology, and for the people to bank the unbanked and give them the power to have full control over their money instead of somebody else. When it's in Charles Schwab and something happens to their network, you can't get to it, period. But the Bitcoin network's never really been down, and neither has the Litecoin network. They have not been down. So you got to kind of look at that. And, you know, you see all this stuff on the news about the Fed and the ACH transactions, and all the digital transactions went down for 6 or 7 hours the other day.
Yeah. Yesterday I tried to send 2 wires and try to receive one, and it was a nightmare.
Right.
You know,
so
but I was able to send Bitcoin.
Yeah, exactly. So that's the point, you know. So there's risks and rewards and challenges with everything. But I think once this space is still so new, and as everything evolves, and there's so many people working on open source stuff, there will be programs. There probably already are. We just aren't aware of them yet, but there will be programs that run your trades through all those programs, and they keep track of everything. It's kind of like Blockfolio with the attachment of the APIs, and it keeps track of all that stuff for you, what you paid for it, when you bought it, you know, what profit you're at right now. That's a beautiful thing. And it's really nice to use, I must say.
Yeah, that's right. But in the same line of thinking too, I mean, really though, at the stage that we're at right now in Bitcoin, we're still in a speculative stage, right? It still hasn't grown large enough to where it's really useful.
Correct.
Right? Because if Bitcoin's at 50,000 or 46,000 today, whatever it is, and you think it's going to 250, are you going to buy pizza with it? No. Right? You're going to hoard it. You're going to buy it, and you're going to hoard it, hodl it until it gets to that kind of price target that you have, and then you might start transacting in it. But at $1 trillion market cap, it sounds like a lot, but it actually isn't. I think Bitcoin goes to 500,000 in very short order. And by the way, that's only 10x.
That's it.
Right?
Yeah.
We just 10x this year.
Exactly. Exactly. So don't say it can't be done.
10x in another year isn't out of the realm of possibility. It's happened before.
Sure.
It's probably more like 18 months, but we're going to see 500,000 or more. And when we get to 500,000, now you're talking about a $10 trillion market cap, right? Mm-hmm. At a $10 trillion market cap for a currency, things start stabilizing a little bit more. You're not going to see like these 10, 20% swings. You're going to see like 2 to 5% swings, right? And as it grows bigger, the law of large numbers kick in, where it takes a lot more to make that type of swing happen. So that's where speculation takes us another 10x. And then that's when we start getting into the more usefulness of the currency, and people start transacting in it more.
Right. Once it stabilizes, and you know, the struggle that the dollar and fiat are going through globally, all the currencies globally, the central bank backed currencies are struggling right now. And I think that's going to continue to happen And pretty soon we'll be looking at, once we stop looking at Bitcoin value in dollars and start looking at it in the value of what it is, and start trading in Satoshis instead of trading in with the dollar mentality, that's when we'll see that total paradigm shift actually happen.
Yeah, that's right. That's right.
So outside of the gaming world and outside of currencies, money related applications, are there any use cases or applications of blockchain tech that you do find interesting?
Well, you brought up NFTs earlier in art, and what I find really interesting, and to me this is more of a financial services application, but it sort of is, it sort of isn't. 10 years ago, when the Fed started printing a lot of money to bail us out of a global financial crisis, we knew that inflation was going to occur. We just didn't know when, right? It didn't happen right away. It's slowly been happening. If you look at real estate prices in the US, there's inflation, right? If you look at food costs and some other things, it's not quite there yet. Well, it might be there now, right?
Yep.
And now with this next wave of money printing over the last year, we're actually seeing swings in inflation. So there's a couple of ways to protect yourself from inflation. Historically, equities have performed well in an inflationary environment, but hard assets actually perform quite well. And those are things like fine art, wine, classic cars. Classic cars is my favorite. Fancier people like the art and wine. Bitcoin is now available as well. So if you can take some of these hard assets that you normally can't own a whole of, and you break it apart, or you lump a bunch together and issue a token that represents value in that represents that property and something that has value and going to increase in value, it is extremely valuable, and it's an inflation hedge at the same time. I mean, if I were to be able to say, okay, or Jay Leno has put his entire car collection in some kind of trust structure and going to issue tokens against it, and you own a piece of his car collection, I'm in that.
That would be sick.
Yep.
I would definitely.
We're going to see that all the time, and it's not even just like physical assets, but also it's already happening for like people, athletes and that kind of stuff. Being able to tokenize yourself and break anything of value down into whatever increments you want and invest in it. So yeah, it's changing shit.
Yeah. And that's interesting to me. I mean, I've been in the business of building ETFs since 2010. And I remember back then, 2010, 2011, I was trying to build an ETF that was inflation protection. A bunch of wild ideas that we were throwing out there, like let's put art in an ETF, let's put wine in an ETF, let's put forever stamps in an ETF, because forever stamps, every time the postal service increases the price, you go along with it, and by the very nature of the postal service, stamps are inflationary. Yeah. So sounds crazy, but it's actually true. So we were looking at that 10 years ago, and people were looking at us like we were nuts. Like, okay, we're gonna wrap that in an ETF. Well, it's very difficult to put those things in an ETF. It's very easy to put those things in a token. And blockchain has changed that, and it doesn't sound so crazy anymore. But things that people were thinking about long ago are now possible.
So let me ask you, how do your colleagues of the past that are still in the financial realm, how do they view your position on cryptocurrencies and NFTs and so on and so forth versus where they're still at? Are they interested at all?
It's a mixed bag. I think a lot of them are falling in line. For instance, Scott Minerd at Guggenheim. I used to work for Scott most of my career. Just since December has been calling for Bitcoin to 10x and put it in one of his hedge funds.
Nice.
So Scott is an old colleague of mine. I work for him. So a lot of that crew that I worked with in the past are, they're starting to embrace it and starting to put it into their products. And then people that I worked with on an ancillary basis, not necessarily with the same company, but at a different company, or sometimes at the same that have moved on. But we talked to, man, I probably talked to a dozen different financial services firms a week that are, well-known names, and they're, and by the way, it's been like this for the last 2 months. It used to be I talked to maybe 2 or 3 a week, 4 years ago, and they're like, okay, this dude's gone off the deep end. I used to know him as a sane individual, but I'm curious. Like I'm going to ask him some questions.
Right.
Now it's like, okay, how do I do this?
And that's the exact same thing that happened with our normally friends, right? Our friends that seen us get, oh, you got into that crypto stuff, huh? And now they're going, oh, you got into crypto. How do we get in?
3 years ago.
All the guys that you were saying, dude, you should get in on this when it was like $3,000, or less, or right around that area, even at $9,000. You're like, I'm telling you, you need to get in on this, and I'll wait till it pulls back at $50,000. You're like, how'd that pullback work for you?
Yeah, exactly. Well, we're pulled back today. Now's a really good time.
Yeah, every time's a good time to buy. You got a DCA, man.
Well, here's the other thing that I tell people too is, I used to be a bond trader, a bond manager, and there were some people that would trade bonds that, they would just trade any kind of bond. If there's a pullback, I'm going to buy it. Sort of like buying GameStop, right? GameStop's a better example. I mean, every time I go to a mall, it looks like GameStop's going out of business, right?
They are.
It's because they are. There's signs that say going out of business,
yes, they are.
40 to 60% off. And when I see that, it's like, okay, I don't want to buy that stock, right? And here's why, right? You can speculate on it. People have made a lot of money. They're like, well, I made money, like that's people's answer, anecdotally. Well, I made money on it, I'm not wrong, but you actually are wrong. And here's why you're wrong. If a company's going bankrupt, that means that they're probably going to zero. And you might buy in, you might catch some kind of headwind or tailwind that takes you up and you sell and you made some money. But the risk of you getting stuck long is very high, right? And people always talk about, the one thing they were successful at, but like the 9 things they weren't, they don't talk about. But there's a high risk of that. Okay. Now, if you buy, let's say General Motors, and I just use that as an example as something that, everybody knows, if there's a big pullback there and you buy it, well, it's not necessarily going to zero, right? It's not a company that's going to zero. So it's if you get stuck and it goes down even further, you can just hold on to it for a little bit. It might come back up, right? Apple, same thing. If there's a pullback and you buy it and pulls back further and you're losing money, like you do have that option to just keep holding on. So my investment thesis is always, what are the fundamentals of what I'm buying? And if the fundamentals are good and you get stuck, you can always catch up. If the fundamentals are bad and you get stuck, you could go to zero. So just avoid everything that has bad fundamentals. Stick with the things that have good fundamentals. And that's the universe that you speculate on. I apply the same concept to cryptocurrencies, right? I'll say this right now, Bitcoin will not go to zero, not in my lifetime. Okay. It's already too big. It's already being used. Now, I would have said that 3 years ago. Okay. Today it's pretty solid. Like we've suffered crypto winter. It's not going to zero. So if there's a pullback and you buy and you get stuck and it goes down lower, who cares? It's still going to 500,000.
Yeah, right. Yep. The ultimate direction is still going to be up.
Yeah.
Well, let's be realistic. Honestly, in the long run,
Dogecoin, right? Like I've never owned Dogecoin. I don't care. I knew that it was getting pumped. I knew that people were buying it. I'm not buying it. Why? Because the fundamentals are bad.
Right.
I could get stuck going down just as easy as I could take, tailwind going up.
So the funny part about Doge is there's so many people that held it from the time when they got it to just use in the community. People were, exchanging Doge back and forth. It was a fun token to play with and to use as a tip money for, this guy or that guy. And then all of a sudden, it gets forgot about, but it's still sitting in the wallet and the shit pumps to 8 cents and they're going, oh my God, they're freaking out. So there's that hype and that, excitement.
Yeah. So, yeah, I mean, look, traders have this saying, right, where there's good decisions that have good outcomes and there's good decisions that have bad outcomes. There's bad decisions that have good outcomes and there's bad decisions that have, bad outcomes as well. And I would always rather make a good decision.
All right. So the biggest decision of the night, if you could lock any sound inside of a box to be opened in 1,000 years, what would it be?
Led Zeppelin 4.
There you go.
Nice.
In its entirety. And played backwards also, yeah.
Exactly.
I love it. That was a
quick answer and probably the best.
Yes.
I can't think of anything better. Yeah.
No, I definitely couldn't either.
Okay. So Mitch, what do you think 1,000 years from now is going to think about Led Zeppelin 4?
I mean, kids born in the 2000s can't not love Led Zeppelin. So if you don't love it, then you just have no class.
Right.
Yeah, it still applies 1,000 years from now. I agree.
That's on them.
It would be a toss up for me with Led Zeppelin or a cowbell. One of those two sounds.
Cowbell.
You gotta have a lot of cowbell, baby. Oh, nice. Shit. That's funny. So that was our top question of the night. Where do you see your future with cryptocurrencies, and how do you see yourself? It's a two-part question. How do you see yourself getting involved with communities, or if you are already involved with communities?
Yeah, I mean, there's a few communities that I've been involved with for a long time. Again, I came from financial services. We're always a little bit more quiet about what we were doing and how we were doing it. A little bit more, we just weren't out there as much. I've spent the last 5 years now just keeping my head down and building. And definitely involved in some of the in some of the communities out there. There's a big community in Nashville. There's a big one in LA that that where I am right now, and I'll still be involved.
Cool. Well, this has been Professor. Unless you have any other questions, we're at our mark here. So
we could ask questions all night. So
I know, right? We could. This conversation could go. I'd have to go get another beer, or at least I don't want another Monster. I definitely have to go get a beer. But you know what? Stephen, this has been amazing. It's been a lot of fun having you on the podcast, and I really like your energy. I love the conversation. It was spot on all night, and really appreciated you coming on the show. And I hope you enjoyed it as well.
No, I definitely enjoyed it, and I really appreciate you guys having me on, and just being able to talk with you guys.
Right on. We like it's there's just something to be said about getting around like-minded people and being able to talk about what you're passionate about and what you believe in. It's pretty amazing. So thank you for joining us tonight, guys. Thanks for listening. We hope you enjoyed the show. Catch us on the next one. Next Thursday, we'll be doing another live stream, and we'll have another amazing guest for you then. Look forward to it. And until then, you guys have yourselves a great night. Get to a coin flip ATM first chance you get, or you can go to coin flip OTC. Take it away, Professor.
Take it away, Professor. See, I see you're just going to throw it on me. All right, fine. Check it out. Coinflip.tech. There's a whole map of ATM locations on the website. You could take a look and see if there's one near you. If there is, go buy some crypto, or maybe if it's two-way, you can cash some out. But if not, then Mitch gets to tell you about the Coinflip OTC and how that works.
Now, Coinflip OTC is amazing, guys, and this is a big plug. This is I'm a user. I've used it. I love it. The guys are amazing. The personable attention you get, and them actually working with you and doing the trades and setting everything up for you is amazing. It's a well-designed setup and product that they have for us. So if you get a chance, use it, give them the CFire or Crypto Campfire discount code, and they'll give you a discount on your entry fees. But great guys, check them out by all means. Better than CoinFake as far as I'm concerned. So
beautiful.
Till next time, guys. Have yourselves a good one.
Take it easy.
Peace.